I have been watching the market for longer than some of you have been alive, and I have never seen a market top with all these indexes making new all-time high or new 52-week high at the same time. If you could tell me the time this had occurred, then I might entertain the idea of a market top, a huge sell-off is coming, or a new bear market, all those things that gloom and doom talking heads are saying. But until you could show me when this has occurred, I am going to tell you that the market is telling us to expect another new all-time high from the SP 500. If you have been watching my video, you probably already know what I'm talking about. But in case you are new to this channel, I will tell you what the market is showing us that is telling us to expect another new all-time high. By the way, if you are new to this channel, be sure to click the subscribe to help support this channel. Stay tuned. On this chart of the indexes, we saw on last Monday the Dow Jones Industrial made a new all-time high and also closed with a new all-time high. Likewise for the New York Stock Exchange Composite and also the SP 500. Now the Nasdaq 100 did make a new all-time high but did not close with a new all-time high last Monday. And here the Russell 2000 made a new 52-week high and closed with a new 52-week high. Likewise for the Dow Jones Transportation. And looking at this S&P 500 monthly chart, we can see that the month of November, it is still positive. But for the week, even though that the S&P 500 made a new all-time high and closed with a new all-time closing high on Monday, it finished the week negative. So as you can see, for the week, the S&P 500 actually ended with a loss of a little bit over 2% or close to 125 points for the week. Now, the top performer is the Dow Jones Transportation, which only lost 0.75% or 126 points. And looking at the Dow Jones Industrial, we see the Dow Jones Industrial lost 1.25% or 544 points. And for the New York Stock Exchange, it also lost close to 1.5% or 291 points. And for the Nasdaq 100, as you can see, the Nasdaq 100 is almost the worst performer, just a little bit above the Russell 2000. It lost 3.4% or 723 points for the week. And the Russell 2000 lost almost 4% or close to 96 points for the week. And looking at this sentiment chart here, we see that the VIX is still below the 20 level, although it did come up a little bit. On Friday, it came up to 16, but it's still way below this 20. So the market participant is getting a little bit cautious, but they are not in a panic mode. And looking at the put-call ratio, it is above that 0.75 here. So it is getting a little bit cautious. The market participants are getting a little bit cautious, but they are not completely risk off. And looking at the market internal, we notice that the up-down volume ratio is pretty much negative most of the week, other than on Monday, it's pretty much negative. And that kind of indicates there are a lot of selling throughout the week. And also in terms of market participation, looking at the daily advanced decline, we see that on Tuesday there was a broad market decline. And for the remaining of the week, it still kind of have downward pressure on there. There are more declining issue than advancing issue. Other than on Monday, we did see a little bit of a uptick on the advanced decline that is positive, but not to the degree that it justifies a new all-time high. And looking at the New York Stock Exchange new high versus new low, we did see the new low kind of holding steady right below that 100 level, but the number of stocks making new 52-week high came down quite a bit. So it's only on Friday, it's only 62 stocks make new 52-week high versus 80 stocks make new 52-week low. So we got a little bit of a negative. The number of stock making new 52-week low outnumber the number of stock making new 52-week high on Friday. And here on the cumulative AD line, we did see the AD line coming down, but not as dramatically as the S&P 500. You see on the closing basis, the slope of coming down is much more steeper than the advanced decline. Nevertheless, it is kind of tilting toward the negative bias level. Remember, we saw that earlier on the daily advanced decline that is showing more declining issue than advancing issue for the most part of the week, other than Monday. And looking at the Nasdaq market, likewise, the Nasdaq market also showing negative bias, with the minus or negative up-down volume ratio for most part of the week, other than on Monday. See also the advanced decline is quite a broad market decline in the Nasdaq. Notice near the 2,000 level for 4 day out of the week is pretty much a broad market decline on the Nasdaq. And here in the Nasdaq market, we noticed that the number of stock making new 52-week low actually got accelerated. It's up at 296 on Friday versus the number of stock that's making new 52-week high came down quite a bit, and it was only 62 stock make new 52-week high on Friday. So you see that the new high, new low is turning negative and much deeper as well, because there are more stock making new 52-week low than the number of stock making new 52-week high. And here in the Nasdaq cumulative AD line, look at the slope, the deceleration or the decline of the number of advancing issue versus declining issue. This cumulative AD line really coming down much steeper than the cumulative AD line in the New York Stock Exchange, and also the steepness of the Nasdaq 100 coming down on a closing basis as well. So it's showing a lot of weakness here in the Nasdaq market, although it's not quite as weak in the New York Stock Exchange, but still, the weakness is there in both markets. Although the market participants are not in a panic mode yet, and they are still being a little bit complacent because the VIX is under 20, but the put-call ratio is also indicating that a lot of the market participants are start putting some hedges on, on the position. So the market is definitely getting a little bit much more cautious than the previous week, even though we have this post-election pump. But the problem is the internal is showing some weakness, and we could see a little bit of a pullback in the near term. And looking at the sector in the SP500, notice that the technology and also the consumer discretionary, the communication, and the retail and industrial all pulled back last week, except energy it actually gained a bit. And also the consumer staple is down. And look at the healthcare. The healthcare really took a beating last week. Now we did see the utility ticked up a little bit, but the real estate also ticked it downward, and the financial ticked up, while the S&P 500 is ticked down a bit last week. So you can see it's kind of mixed bag, and we did see some of the a little bit of a defensive type of sector have did a little bit better than the growth and some of the other sector. For example, the oil, financial, and utility, they all ticked up. And looking at some of the key industry sector here, you see that the semiconductors also came down for the week. Likewise for the oil, even though we saw the energy sector was up a bit, and that's probably the reason due to the explorer and the refiners, because we see the XOP is up a bit last week, but the again the retail is down, and also look at the biotech, and the miners also came down because gold was pulling back due to the strong dollar last week. Also, we see the bank and also the regional bank is up, but the home builder is down. And look at the long-term bond, the TLT has also continued to move down. So we saw the 10-year rate went up last week. Now let's take a look at some of the price action, starting with the ES, the E-mini S&P 500. Notice most of the part of last week, it basically spent up at this area here between the 59.80 and 60.40 area, and balancing up here. Then on Friday, it broke this balance area and came back down to this balance area between 59.20 and 58.40 area. So we could see that right now it's probably will try to stay down here and try to balance or find acceptance in the coming week, unless it could pop back out and move back up to this 59.80 or 6,000 area and get back into this balance. And on this market profile chart for the ES, we see that if the price decide to balance here, find acceptance down here, then we could see that this gap will get filled in the coming week. Now, although that it still have some unfinished business down here, but we also have a single print that left behind in today's auction and also some single print from here. And remember, we also have this poor high up here. And in addition to that, we also have the Globex all-time high, and that is one of the clues that the market is telling us to expect a new high for the S&P 500. Because when the E-mini S&P 500 come up and resolve that Globex all-time high during the regular trading hour session, then the S&P 500 will likely also come up and make a new all-time high. And that's one way that the market is telling us to expect the new high for the S&P 500. And looking at this daily candlestick chart for the E-mini S&P 500, we noticed that last week the price actually closed below the lower range of the weekly expected move. And we see that it is trying to come down and fill this gap here. In addition to that, it is trying to come down to this balance area here. Right, that's one of the balance area. It's been balancing up here, then it finally broke on Friday and came down into this balance area. So in the coming week, we'll be watching to see how the price will react. Would it come back in to this balance, or would it continue to come down and try to balance here, or it might even come down to this area to balance. So let's see what the expected move for the coming week. And for the coming week, the market is pricing in the upper range somewhere around 59.95 and 59.87. And for the lower range is between 58.13 and 57.75. So if we see this to get filled, this gap here, and also come down to balance in this area, and possibly expand this this volume area to make this into a huge area of balance, then we could see that the price will come down and test this lower range of the expected move. Now, if it come back in to this balance here and possibly come up and take out this Globex all-time high and put in a new all-time high for the S&P 500 as well, then we could see the price come up and actually test this upper range and possibly take out this upper range and push up into the all-time high territory. And we look at the SPY, the S&P 500 ETF, it also closed below the weekly expected move, the lower range. And it is trying to come in to fill this gap here. Again, coming into this balance area. For the coming week, the market is pricing in the upper range between 596.30 and 594.60. And the lower range is between 576.90 and 574. So for the coming week, the price action is we'll be watching to see what it come down to fill this gap and try to find acceptance in this balance area. Now, if it come down and try to get into this balance area, then the lower range will be in play. And if it decide to pop back up, back into this balance area and possibly put out an all-time high, then definitely this upper range will be in play for the coming week. And for the NQ, we see that the NQ is almost filled this gap here and it's dipping into this balance area. So for the coming week, watch for the NQ to try to find acceptance in this balance area between 20,500 and 19,900 area, and see would it be able to find balance, or would it be able to come back up and get above this 21,000 area and push into another new all-time high. And for the QQQ, the ETF for the NASDAQ 100, we see that it also closed below the low range of the weekly expected move and also almost closed this gap here, and it is in this balance area. So for the coming week, the market is pricing in the upper range between 509.50 and 507.60, and the low range between 485.50 and 482.50. So we'll be watching to see what it come down and fill this gap and try to balance here. If it dipped below and try to get into this balance area, then we see that the lower range would be in play. Now, if the price move back above this balance area and try to get back up into this balance area, then we could see that the upper range will be in play and possibly the all-time high. So from last week's price action and also the market internal, it definitely throwing in a lot of caution sign for us to be careful for the coming week. We could see a little bit more pullback before we see another leg up, and then we may be seeing another new all-time high. And who knows, maybe the next new all-time high will be a intermediate top. But until then, we just basically have to trade what we see and not to trade what we believe. Now, if you are new to this channel, be sure to click on the subscribe to help support this channel. And if you want to see additional content from me, go check out my newsletter at Substack. The link is smtraderca.substack.com. And be sure to smash that thumbs up to help promote this video. Thank you for watching and good luck on your trading.